Escalating trade war tensions are pushing precious metals such as gold and silver up to parabolic status. And inside the service, elite service members, the gold and silver upper boundaries have been released. The paths that you just saw on gold and silver are part of the monthly structural model. We need to understand, is structure being overcome? Is structure weakening? And we put this into a institutional grade edge methodology, which is literally the CTKS method. What we need to understand, especially on a daily basis, where are the structural failures and structural passes occurring? At the moment, we're just looking at gold and silver from the cheat sheet. And the cheat sheet is available absolutely free of charge from CTKSmethod.org. One of the most important things that we do under Level 1 and Level 2 standard certification is draw up these particular lines. Now, I'm going to go into gold and silver because they're really hot things. We'll look at Bitcoin as well. It's through a knowledge of the structure of CTKS levels that we do these paths. We do these paths within the first week of price action, and we just project them outwards, just taking account all of the structure that's inside the chart. Drawing those dotted lines may seem really easy. There's actually quite a lot to it. It requires both Level 1 and Level 2 standard certification. Level 1 is the foundation, Level 2 is where all the magic happens, and the CTKS paths are right here in Lesson 22. So let's get back to them on gold and silver. When we look back at gold into September, that CTKS path was drawn to reflect structure, not price. It couldn't reflect price because we drew it at the start of the month and then price printed. And we do not alter these paths. That's an absolute no-no. What we do is that we want to see how structure is interacting with price. Are we getting structural passes or structural failures? Last month, gold was just on the positive price path and just closed slightly above the end of month target. What we've seen in gold, it's already reached the end of month target already. Now we're only a couple of weeks in to this month, but we need to look at structure. Price doesn't move randomly, it moves structurally. Unfortunately, the vast majority of people actually don't understand structure. They'll look at recent indicative price and they'll say something like, okay, price printed here, therefore that's structure. No, that's not structure, that's RIP, recent indicative price. To actually understand the structure in gold, we literally have to go through 70,000 days worth of data. And that's what we do with Level 1 and Level 2 standard certification. Now, I'm just going to pop on this indicator, which shows you that Level 1 and Level 2. You can see that this green dotted line, that's actually the target for the end of month closeout under normalized price conditions for gold, 41.74. And we can also see just up a little bit higher. Let me just pull this down a bit. So around that 42.24 level was a lot of sellers inhabiting those areas, and they pushed the price of gold down. But where did it get pushed down to? It got pushed down to structure, and that structure rebounded it. You can imagine if you saw a big sell-off like this, or you were in a big sell-off like this, you could literally think, this thing is going to zero. It's just going to plummet. Oh no, it's going to structure. But where is the structure, and how do you know it ahead of time? That is really the key issue. We look to the right. This is the world's only forward-leading indicator of price using TA, technical analysis. Let's have a look into silver. Now, when we look at silver, we know gold and silver are basically geopolitical risk signals. If gold and silver are going parabolic, that means there's so much economic uncertainty inside the markets, and people are just getting out of one market, rotating their capital into the commodities market. Let's have a look at silver structurally. So we'll just pop on the indicator. Now, this indicator is available to the elite service members. Now, one of the things that you notice already, we had a positive closeout price target on the month for silver at 52.16. So we've managed to get up above that. Now, this is on just extreme levels of geopolitical conflict and trade wars. One thing that we know, when we look at structure, it is so incredibly powerful. For one thing, it is rightward looking, not leftward looking. We don't need to wait for price to know where our support and resistance levels are. We know already. And silver has analyzed through level 1 and level 2 standard certification in excess of 80,000 days worth of data. All the number crunching has been done for you. So when you look at this 52.16, it's a really important level. It acted as resistance. We got above, wobbled around a bit, broke out, and have come back and retested that level. So we've definitely got buyers in the commodities markets at current times. Now, what happens when geopolitical pressure starts to just wind down, when trade deals are done? Of course, the commodities will retrace, will get capital flows back into risk-on asset classes, such as Bitcoin. Let's have a look at that now. As the markets are very uncertain at the current time, we've seen the risk-on asset class, Bitcoin, has retraced. And that retracement, it's still not confirming a bullish change in sentiment. We're under a bearish trend line at the current time and bearish price momentum. It doesn't mean we're going to stay there, but we are, and we just have to accept price reality. Now, what happens if gold and silver start to come down? We would expect capital rotation, of course, into the crypto market. Now, we're looking at Bitcoin's chart on a daily basis right here. Now, let's look structurally. A lot of people don't hold a lot of confidence in technical analysis because people just draw lines randomly, and they draw lines just to meet recent price. So if you look right here, for example, let's just look at this area. So this area is around the 110,401, a little bit lower, 109, say 109,800. So how it would work, if people were retail, they would say, oh, this 109, let's call it 700. This 109,700 is the level. There's so much support there because it came down, got bought up, came down, got bought up, came down, rallied, came back, retested, came down. There must be a huge amount of buyers at 109,700. Let's actually check if this is correct. I'll just go into a structural view of Bitcoin, put that 109,700, and let's look at a markup with level 1 and level 2 standard certification. Is there an overwhelming amount of structural support at 109,700? You already know it's not there. It's right here at 111,200. This is the area of structure that's actually been keeping Bitcoin up. Now, a lot of people don't understand where the structure is because they go from recent indicative price. Recent indicative price is like just taking a very, very tiny sample of price and saying this is everything. It's not. It's tiny. Now, what does this mean to us? It means something very important. When you know where the structure is, you have X-ray vision. Now, a lot of people think that structure acts as a brick wall. It doesn't. It acts as a gravitational area. And this 111, say 200, 111,200 is the gravitational well, or GW, that you need to look at. These lower levels have indeed caught price. For example, the 110,400 level caught price, and a little bit lower at 110,100. But you can see there's literally really not much, if anything, at 109,700. When you understand how price works, price is very elastic. It overshoots, it comes back, it overshoots, it comes back, it rebounds, it comes back, but the gravitational wells are what you need to look at. By looking at this structure, and you know it takes 2 levels of standard certification to draw this out, by looking at it, you know exactly where the safety nets are, how strong those safety nets are. Around that 109,700, there is a safety net, but it's kind of weak. The real safety nets are up at this 111,200 area. This is where you need to keep your eye on price. Unfortunately, many people think that price just moves randomly. For example, Bitcoin's price chart controls Bitcoin. Gold's price chart controls gold. Silver's price chart controls silver. This is absolutely, fundamentally incorrect. What you have is intercorrelation between all of these key charts. This is what the cheat sheet measures. For example, when we have a spike in the VIX, which is the fear gauge of the main market, junk bonds is hit, which means that people are getting really concerned about credit and credit spreads. That impacts and influences Forex, which is literally the cost of money. And then it influences credit creation, which is measured through the 2-year and the 10-year. Of course, also commodities get hit. Gold, silver, copper, and oil. There are structural levels, just like Bitcoin, for every single chart under here. And when you look at the market, you must look structurally. It's really, it's vital. Without structure, you're basically and fundamentally just flying blind. But there's a thing called intercorrelation, and intercorrelation is how all of these charts move together. Unfortunately, people are taught to focus on the chart that they put money into and ignore everything else. This creates a situation where in times of big drawdowns inside the market, people just don't see it coming in advance, and you realistically need to see it coming. For example, if we look at the S&P 500 futures, the Dow futures, the Russell futures, and the NASDAQ futures, we saw a retracement in those futures plus a little bit of a recovery. What's the blue line? The blue line is Bitcoin. Bitcoin just follows the major market indexes, especially the futures of them. So it's very important to know what the futures are doing. If the futures are coming down, expect negative price momentum inside the crypto market. But how does it relate to other markets, such as gold and silver? For this, we need to understand the cheat sheet. We need to go through all of the rows. Just before we do that, I wanted to give you a quick look at the current percentage change across the past couple of days of the major market cryptos. It's really important that you don't go too far outside these cryptos. If you do, you could see incredible reductions in price. The crypto market has over 23 million different projects in it. So if you go too far outside the risk curve, just seeking those 100x gains, chances are you'll just pretty much lose your money. The big institutions are concentrating their funds into these particular cryptos. And if we want to trade gold on crypto exchanges, we can through PAXG. Looking through row 1, which is the VIX, the volatility gauge of the main markets, dollar, yen, 10-year, 2-year, and oil, we can see that the VIX has spiked up. That spike up in the VIX was responsible for Bitcoin coming down. A lot of people said that they didn't know or could anticipate that Bitcoin could retrace so wildly. We have been watching the VIX just base for months and months. This was always on the cards. And many people inside our community completely bypassed the losses that so many other people got destroyed by, especially those doing the cheat sheet. The cheat sheet should be done on a daily basis. The Profiting Masterclass gives these templates, and I'm going to be giving out 5 near full scholarships for the Profiting Masterclass, which interprets all of these charts and looks at things structurally, as well as just takes you through real examples of how to trade and make money at times like this. The Profiting Masterclass is an absolute game changer. It's all about you understanding from an institutional level how to get in and out of markets. Week 1, there are 4 weeks inside that masterclass. Week 1 is undoing all the damage that's been done to you by retail trade perfection, or RTP. RTP is a very insidious thing. It destroys profitability and people don't even know they're subject to it. Week 2 is going through all the components of the cheat sheet, predicting tops and bottoms. For example, predicting tops and bottoms on gold, silver. That's pretty important right now. We should see a flow from gold and silver into Bitcoin. Now that could be really interesting. And of course into the main markets. Week 3 is where I show you literally, you stand behind me as I'm trading in a very negative market. A negative market, part of the bull market, but a negative market going down like this. And we know when crypto goes down, boy oh boy, does it go down. This will give you really invaluable assistance in how you can look at price day by day by day. And week 4, we tie it all up together. To be eligible for that near full scholarship, you need to reach out and directly message me on LinkedIn. The link is here. It's also in the description of this video. I've been around for about 4 decades in the financial markets. I offer a very unique perspective on how you can make money in any market. You'll find things inside the masterclass you will not find anywhere else. Okay, let's get back into row 1. We've seen the VIX. The VIX is wildly elevated. Now, this means something really quite substantial. The VIX usually spikes up, then decays. What I'll show you here is just what the VIX normally does. When the VIX spikes, it typically just retraces like this. If it does that, the VIX spike typically just hammers in the bottom and we get upward price momentum. The blue line is of course Bitcoin, and we know where Bitcoin is going, the stock market is going from a directional basis as well. So we've not seen this kind of decay, we're seeing this kind of consolidation. Now, if the VIX breaks down, that's fantastic. We'll find a bottom and we'll rally. If the VIX breaks to the upside, we're going to come down further. You must be prepared for both scenarios. Also, the scenario that Bitcoin just wobbles around and consolidates for a while. Something really interesting to keep your mind on. When you overlay gold here, you can see gold has been basing for months and months and months. This is a daily chart. You can see it was basing from here through to here. Then it made a decision to take off. And boy, oh boy, did it take off. But when things take off, they do eventually retrace, and they can retrace really hard. So when a retracement occurs, please be aware, you may be chasing FOMO at the moment, but just always understand, price is always moving in a wave, always up and down. Now this is really quite intriguing, this particular action with gold here at the current time. When we look at this big explosion, gold was going for it. Then the markets, the VIX, melted up, melting Bitcoin and the main markets down. Now when it did that, gold retraced. Now why is this the case? Because all markets are intercorrelated. An investment in gold is an investment. People think that gold is some mysterious thing. It's not realistically. It's a very good investment, but it just is subject to wave-based behavior, just like everything. And of course, the best time to buy is when the VIX spikes up. So please let that be a guide as well. We always think from an institution of one perspective. When looking at row 1, we know the VIX was basing, it spiked, it's just elevated, it's not coming down at the moment. If it breaks downwards, we know that the stock market and crypto are going to go ballistic. They're going to come up in a big way. If the VIX keeps on spiking up, we know that negative risk momentum will enter everything, including gold. Now, when we look at the DXY, the US dollar currency index, we can see upward pressure and momentum. What is this? This is a flight to safety. When you get all of this negativity inside the market from the VIX, the DXY, which is literally people taking their money out of the markets and putting it into the dollar, it goes up. Now, what are we seeing here? Well, this is kind of interesting. The dollar is losing a bit of strength. That well, does that mean that the VIX is going to come down? We need to keep an eye on things because the current administration in the US can get really volatile, as people have found out. What about the yields? We've seen the yields, the 10-year yield come down, the 2-year yield come down. Now, this is really good for gold and silver, but if these start to come up, gold will be hit. Silver will be hit as well. And we've seen in proper bull runs, the yields come up with Bitcoin. And we've seen recently that oil has also been hit. If you've been following the news and the sentiment of oil, there is a glut developing. And with the new Japanese elections, we've seen dollar-yen weaken. We've seen the yen weaken considerably, which has pushed dollar-yen upwards parabolically. These things always normalize. Therefore, risk sentiment at the moment, at the current time, is negative, and it could change to positive risk-on behavior, but not just yet. When we look at row 2, which are junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper, one of the things that we've seen as the VIX spiked up, we saw mass declines across the main markets. Trillions of dollars were wiped out. We've seen the starting point of a retracement at least up to this 97.60 level. This is really good because a lot of people don't know, but junk bonds fuels the major market indexes, and the major market indexes fuel Bitcoin. A lot of people get confused because it's not just an instantaneous relationship. There are lag effects in here, but we see gold and silver going utterly parabolic. Why? Geopolitical uncertainty is at all-time highs, especially with the China-US tariff trade war. What about the euro dollar? Typically what we've seen is when the euro dollar comes down, that throws negative price momentum inside the crypto market and also the stock market. Now we've started to see a retracement. When we look at this, we know the VIX is just going sideways at the moment. The dollar, the DXY, is already coming down. Are we going to see the euro take off? Now, a lot of people would say, Ken, I don't care about the euro. And that, my friend, is not good. Because if you don't care about the euro, it's like saying, I don't care about intercorrelation. I don't care that the markets could either tank or explode upwards. And this is what led to so many, literally millions of people losing their entire life savings across the stock market, across crypto, across everything. Because when these impacts hit the market, you have to be aware of what damage they can do. It's not just buy the dip, buy the dip, buy the dip. You need to be sensible. If the VIX looks like it's going to spike up, well, that's a cause for concern. And you can see there are other alternatives that you can rotate your capital into, if you wish. Now, what we're looking at with the Aussie dollar tends to just follow Bitcoin's directional price momentum. If the Aussie dollar is starting to flatten out, if it starts to go positive, if that is confirmed with the euro starting to go positive as well, the dollar starting to come down as well, we could be in for broad-based rallies when everybody is super negative. Welcome to retail. Retail basically gets everything wrong and blows up their accounts. You do not want to do that. You don't want to be retail. You want to be an institution of one. What you're doing now is stacking probabilities. Stacking probabilities is how all professionals deal with market volatility. The markets are always uncertain. If you're thinking about certainty inside financial markets, the only people who will sell that to you are unfortunately scammers. Every single veteran inside financial markets knows that price moves in a wave. Intercorrelation is the thing that moves charts around. When we look into row 3, and this is a really important row, which is the S&P 500, the Dow Jones Industrial Index, the NASDAQ Comp, and the US Russell 2000. What we're seeing here is that we had that retracement. Notice how Bitcoin just went with the retracement and has gone a little bit more negative. Why is this the case? Well, Bitcoin and crypto are highly risk sensitive. And that means when people get really perturbed or stressed out, crypto gets hit, and it gets hit hard. But when they get excited, boy oh boy, does crypto rally like a nutcase. The key question, do we have broad-based repair across the major market indexes? This, absolutely not. This, no. This one, no. This one, yes. The Russell is starting to lead the way. The small caps are recovering. And this is generally a really good sign. Remember, the stock market has lags in it, and those lags can drive you absolutely fruity because it could take a week for Bitcoin to turn around, or it could just turn around in 24 hours if it's going to follow the Russell. So we're seeing the first starting signs of green grass starting to grow in the desert. I hope you can see how important it is to look through the cheat sheet. If you go to CTKSmethod.org, just scroll down until you get your cheat sheet to Mastering Price Action. This is where you download it absolutely free. The cheat sheet literally is a superpower. And if you would like some videos to help you to fill out the cheat sheet, they're down just a little bit further. And the official ticker list for the cheat sheet is this one here. We need to look a little bit more deeply into row 4, which is Apple, Microsoft, Nvidia, Tesla, and also strategy. We can see that over the past, and this is on a daily basis, we've seen that Apple has been hit as well. But is it recovering? Has it recovered? Not yet. What about Tesla? Has it recovered? First starting signs of green shoots coming out. Now this is really good news because Tesla tends to lead the market out of retracements. So that is something like the Aussie dollar basing, the euro basing, the DXY starting to come down, the VIX starting to base. Hey, you're talking like an institution. This is how institutions talk. They look at everything. Now, what are we seeing with Microsoft? Has it recovered? No way. What about Nvidia? Still under pressure. What about strategy? Strategy is bleeding. Why? Because Bitcoin is bleeding. If you see this blue line behind every chart, that's Bitcoin. And you can't even see the blue line because it's moving in lockstep. Correlation with strategy. Let's get into row 5. Now we're looking across that same period under a daily basis from about the start of September. So we saw total crypto market cap outperforming Bitcoin and then starting to come back, and when the VIX spiked up, the crypto market got absolutely decimated. It got whacked in a big way. Things dropped by up to 80%. This is crypto. It's something that you've got to be aware of. And when we look at Bitcoin, Bitcoin really didn't drop by that much, but things like Pepe and other cryptos, they dropped by a lot. ETH didn't drop by much. Now, why didn't they drop by much? It is not a conspiracy. It's about concentration of flow of funds. What typically happens, the institutions are like literally billions and billions of dollars into Bitcoin and into Ethereum. They, of course, won't let it go down too much. They have very full order books. Are we seeing a sign of things turning around inside the crypto market? Actually, we're not. We're seeing increased selling pressure. Now, does this mean it's only going to go down? Now, the answer to that question resides in intercorrelation. If the US markets, say for example the S&P 500, the Dow, the Russell, and the Nasdaq, they start to recover, because don't forget Tesla is starting to recover. These sub-components, the sub-stocks can't recover unless all of the market recovers as well. That may sound a bit funny, but it's absolutely the correct case. They say a rising tide raises all boats, but some boats get to the tide faster than others. When we look at Bitcoin, just from a recent indicative price perspective, which is something we don't do, but just you must understand how retail is thinking about things. And right here, what is retail thinking? Retail is thinking, oh, there's a whack of support here. It could go up, and it could go up, but not for the reasons they think. The reason is junk bonds, the euro dollar, the Aussie dollar, the DXY, dollar yen, VIX, all of that. That is the reason. Remember, retail only focuses on one chart. And when they focus on one chart, they do not know intercorrelation, interconnection. They can get absolutely slaughtered. Inside the service, we only deal with these charts that have good amounts of liquidity in them. If they don't have good amounts of liquidity, we just don't touch them because large players cannot play in low liquidity tokens. Going into row 6, which is Litecoin, Bitcoin Cash, Binance Coin, and Ethereum Classic, we saw when the VIX spiked, Litecoin got hit. It literally halved. It more than halved. What happened to Bitcoin Cash? It came down somewhat, but it didn't do something like that. What about BNB, Binance Coin? Yeah, it got whacked as well. So many people think that Binance is responsible for this particular sell-off. That is absolute rubbish. It's rubbish, and I reached out to CZ and I informed him it is not the case. There could always be exchange-related issues, and he actually funded many people that he didn't have to fund. Because that is CZ. He does things like that. And he even went to prison because the US government under the previous administration was prosecuting everyone in the crypto space. Well, just about. Looking into row 7, which is ADA, Cardano, Sol, Solana, Dogecoin, and XRP, and looking since around that September mark, we saw that when the VIX spiked, boy oh boy, did ADA just absolutely die. It went back to 27 cents and then it got bought right back up. It is very common for market makers to reduce their exposure when the VIX spikes. Please be aware of that. It happens inside the stock market as well. Solana did quite well. It didn't have those spiky things occur. And Dogecoin went down to literally 10 cents and then recovered. What about XRP? XRP went down really quite considerably, like $1.34. So one thing to just always be aware of, if you're in the crypto market, these things can make you a fortune. Unfortunately, I was doing active trading and I didn't take advantage of these things because I was too tired. I literally slept through this whole thing. I slept 13 hours that particular day and I missed all of this price action. But the impact on my portfolio was neither here nor there. I didn't get hit. I talk about that in the Profiting Masterclass, how you can do active trading when things get a little bit risk averse. It just sucks because the next day I was going to put orders down to 70, 80% and I missed it. And this is one thing that you will find. You will find that from time to time you can't take advantage of these wicks, even though you would love to take advantage of them. They just occur at the wrong time. And this is okay because it's just life. You won't get every bottom, you won't sell every top, you won't take advantage of every spike, and you just have to get used to it. That is the market. And anybody who tells you, I sold every top and I bought every bottom and I never lose, that person is full of, You just insert the word you want. So what are we seeing here? From a stacking of probabilities perspective, we may find if the Aussie dollar starts to just go for it, the euro starts to go for it, the DXY starts to go down, the yields start to come up, we may find a broad-based rally. It is so early. It's like early, beyond early days. We've also got something going in our favor. If we can manage to get above that 111,200, flip it into support, that would actually just add so much credibility to a bullish case just developing. Very, very early days. This is the kind of analysis that you can do. The other thing is that a lot of retail will say, 109,700, that's the most important line in crypto. It's absolute trash, but it doesn't stop people from saying such garbage. With the structure, and you can learn to mark it up yourself, and the Profiting Masterclass, you will be able to take advantage of it. So many people got hit by the reduction inside the crypto market. So the one thing that I want to do my part to help people out. You're going to have to put in the work. There are 105 lessons in the Profiting Masterclass. Please reach out to me through LinkedIn if you're interested in getting a near full scholarship. This is open to everyone who wants to profit from structure. And just bear in mind, this is the profile link that you can directly contact me on, or alternately, just look in the links in the description of this video. If you would like to do the course, please reach out. I want to look after you, but you must take the first step. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now. Oh, and one final thing. Those near full scholarships are going to close on Friday. So please reach out. Don't be late. If you're sick of losses, if you want to stack probabilities like a professional, that Profiting Masterclass is the best thing on earth that you could do, no question about it. Please make sure you reach out if you want it. Have a great one ahead, my friends. Catch you next time.